Have you ever pondered over the concept of a Bitcoin ETF and its operation? As we delve deeper into the era of digital currencies, terms like Bitcoin ETF are becoming increasingly commonplace. The acronym ETF stands for Exchange Traded Fund, a type of investment fund and exchange-traded product. As the name suggests, it's traded on stock exchanges, much like stocks. Now, imagine combining this with Bitcoin, the world's first and most popular cryptocurrency. The result? A Bitcoin ETF. It's a hot topic in the world of cryptocurrency, stirring up debates and discussions among investors and financial experts alike. The prospect of a Bitcoin ETF promises to bridge the gap between traditional finance and the somewhat daunting realm of cryptocurrencies. If you've found yourself puzzled by the term Bitcoin ETF, you're in the right place to unravel its mystery. So, what exactly is a Bitcoin ETF, I hear you ask? Well, let's delve into that. A Bitcoin ETF, or exchange-traded fund, is essentially a bridge that links the traditional investment market with the contemporary world of cryptocurrencies. It's a fund that tracks the price of Bitcoin, one of the world's most popular and valuable cryptocurrencies. But here's the interesting part. The beauty of a Bitcoin ETF is that it allows investors to get a piece of the Bitcoin action without having to go through the process of buying, securing, and storing Bitcoins themselves. Think of it as owning a shadow or reflection of a Bitcoin without having to hold the actual coin. Now you might be wondering, how is this possible? Well, it's actually quite simple. A Bitcoin ETF owns and manages a pool of Bitcoins. When you buy shares in the ETF, you're essentially buying a piece of that pool. As the price of Bitcoin changes, so does the value of the ETF and, consequently, the value of your shares. The real kicker? Bitcoin ETFs are traded on traditional market exchanges, just like stocks. This means you can buy and sell shares in a Bitcoin ETF using a regular brokerage account. You don't need a special cryptocurrency wallet or have to memorize a long and complex cryptographic key. It's a game changer for traditional investors who want to tap into the lucrative world of cryptocurrencies, but find the technical aspects daunting or simply too time-consuming. Moreover, Bitcoin ETFs are handled by professional fund managers who use sophisticated strategies to track the price of Bitcoin. This provides a level of oversight and security that you wouldn't get if you were managing your own stash of Bitcoins. In essence, a Bitcoin ETF simplifies the process of investing in Bitcoin for traditional investors. It demystifies the often complex world of cryptocurrencies and makes it accessible to the everyday investor. So, if you're looking to dip your toes into the Bitcoin pool, a Bitcoin ETF might just be your perfect diving board. Now that we know what a Bitcoin ETF is, let's delve into how it functions. A Bitcoin Exchange Traded Fund, or ETF, is a financial instrument that tracks the price of Bitcoin in the same way that an index fund tracks a basket of stocks. But instead of buying and holding stocks, a Bitcoin ETF buys and holds Bitcoins. The fund manager purchases Bitcoins and creates shares of the ETF, which are then traded on a stock exchange. Each share represents a small piece of ownership in the overall pool of Bitcoins held by the fund. This is where the magic happens. Instead of buying Bitcoins directly, investors buy shares in the ETF. The ETF manager's job is to keep the price of the ETF shares in line with the price of Bitcoin. If the price of Bitcoin goes up, the ETF manager buys more Bitcoins to create new shares. If the price of Bitcoin goes down, the ETF manager sells Bitcoins and reduces the number of shares. This way, the price of the ETF shares closely mirrors the price of Bitcoin. Now, you might be wondering, do I own the Bitcoins when I buy ETF shares? The answer is no. When you buy shares in a Bitcoin ETF, you do not own the Bitcoins themselves. You own a piece of the fund that owns the Bitcoins. This means that you don't have to worry about storing or securing Bitcoins, which can be a complex and risky process. You also don't have to deal with the technical aspects of buying and selling Bitcoins on a cryptocurrency exchange. Instead, you can buy and sell ETF shares just like you would any other stock, using your regular brokerage account. This makes Bitcoin ETFs a convenient and accessible way for more people to get exposure to the price of Bitcoin without needing to understand or deal with the complexities of owning Bitcoins directly. So, Through a Bitcoin ETF, investors can participate in the Bitcoin market without the need to own the actual Bitcoin. Understanding Bitcoin ETFs is one thing, but why do they hold such significance in the cryptocurrency world? Bitcoin ETFs are a game changer in the crypto space, and here's why. The primary allure of Bitcoin ETFs lies in their accessibility. Traditional investors, who might be wary of the technicalities involved in buying and securely storing Bitcoin, can easily invest in these ETFs using their regular brokerage accounts. It's just like buying shares of a company, but instead, they're buying into the Bitcoin market. This ease of access, coupled with the regulatory oversight that comes with ETFs, makes Bitcoin investing less daunting for the average investor. It's a way to tap into the potential returns of Bitcoin without the need to master the nitty-gritty of cryptocurrency trading. But that's not all. Bitcoin ETFs also play a significant role in adding liquidity to the Bitcoin market. When more investors buy into the Bitcoin ETF, the fund manager has to purchase more Bitcoin to back the ETF shares. This increased buying activity can help stabilize the notoriously volatile Bitcoin prices and make the market more efficient. So you see, Bitcoin ETFs aren't just another investment vehicle. They're a key tool in bringing cryptocurrency into the mainstream, offering a simple and secure way for everyone to participate in the Bitcoin revolution. In short, Bitcoin ETFs serve as a bridge between the traditional finance world and the emerging world of cryptocurrency. To sum up, Bitcoin ETFs are an innovative financial product in the world of cryptocurrency. They serve as a bridge, simplifying the process of investing in Bitcoin by mimicking its price in a regulated environment. This groundbreaking tool has a profound significance, as it allows more individuals to participate in the cryptocurrency market without the complexities of direct Bitcoin ownership. With Bitcoin ETFs, investing in Bitcoin has become a less daunting task, opening the door for more individuals to participate in the cryptocurrency market.